Hi, this is Sam here with the Bulletin Board Heroes here at Zach's Traders Cafe for Friday the 29th of December. Starting off with the FTSE 100, which is in this little range here, 7,700 to 7,760. Have been looking for a push towards 78.10, which is that resistance line there from back in May. But obviously it looks as though we're going to make it for 2023. On the downside, not expecting anything lower at the moment than 76.30, which is that old broken February resistance line. 50 and 200 day lines both rising nicely now, so that should at least give us the chance of 7,800 plus but early in the new year. And then as a best case scenario by the end of January, which sounds rather optimistic, but 80.60 at that upper parallel from the March rising trend channel that we've got overall since early last year. Moving on to indices which actually do move properly, and the first one is the DAX. Here we've had this market in consolidation mode after the mighty run from basically the end of October. The support here recently in the 16,100 area, looking for a break of 16,900 to get us up to a new leg to the upside for early 2024, 17,900. On the downside, not looking for anything lower than 16,100, which was basically the late summer resistance for this market, and ideally we just stay above 16,500 and that old July peak. On to the Dow, which really has been showing up the other markets in the near term. Here you can see that nearly up to that resistance line target, 37,900, that we were looking for by the end of next month. So sometimes these optimistic calls do actually work. Rising trend channel from the beginning of October, top of that channel heading for 39,300, and we're looking for that by the end of next month, while we remain above recent support around 37,100. On to Bitcoin, where the hopes are that we'll keep the stellar run that we've had for the last part of 2023 going into 2024. So far, a little bit of a struggle here at the floor of this rising trend channel from October. So now the risk of a test of the 40,000 area, which is basically recent support, and also the 50-day line. Worst case at the moment down to 38,000, 39,000, and the old November resistance. Moving on to the stocks, and starting off with Abingdon, and here it's looking quite interesting in the sense that we've broken a line of resistance there from June. I've got a rising 200-day line there around 9.7 pence, but above that June resistance line at 10.75 pence. Looking for at least a retest of the 14 pence post-July resistance, and then maybe up to 18 pence by the end of February. But early days yet, let's see how we go on that. I didn't really want to look at Bradda ahead, but if you look closely, you'll see that the shares are actually delivering a potential decent setup. We had a gap down back at the beginning of the month and a gap higher today. It's a bear trap island reversal, which can be one of the strongest signals around. There is some resistance there at 1.9 pence, but above that, looking for 2.8 pence as soon as the end of next month, backed by the uptrend line in the RSI window, or at least bullish divergence. And of course that bear trap island reversal, which is one of the strongest charting setups. Haven't looked at this next stock for quite a while, Bisichi, and here, although there's not much to go on, we do potentially have a broadening triangle base, broadening triangle there from the beginning of August. Top of that triangle heading for £1.67, and we're looking for that while we remain above resistance on the way down around £1.20. The reason for inclusion today is the way that, if you look closely, we've got that sideways shuffle above a now rising 50-day moving average. And if you remember the greatest movers or greatest rises of 2023 video that I did a few days ago, that has actually been in the last year the strongest and most reliable signal. On to Creo, which I think we were looking for a target around current levels, 44 pence by the end of the month, but the current situation is that we've broken the old resistance there from June around 39 pence, just under 40 pence, and above that looking for 50 pence by the end of January. 50 and 200 day lines now rising nicely, and as I said, above that 40 pence area looking for 50 relatively soon. Excitement at Emmerson at the moment. Here we've had the rebound, bear trap rebound from below November support around 1.3 pence. Bullish divergence line there as well. And the latest development is the way that we've cleared the 50-day moving average of 1.5 pence above that, looking for up to 2.6 pence by the end of next month. I've covered Greatland quite a lot in the recent past, and it looks like it's responding well. Yesterday we had an end-of-day close above a sharply rising 50-day moving average at 9.3 pence, and above that we're looking for a move towards the top of that broadening triangle from back in November. That's currently promising us a target as high as 12.6 pence by the end of next month. News from Harland and Wolff, which seems to be have been well received. Here we've had a bounce off that wide rising trend channel that we've had since April, and the sizzle here today is that we've had a bear trap rebound from below a rising 50-day line. Tends to be a very strong signal, and hopefully that will be the trigger for a move towards 21 pence as soon as the end of next month. Ideally, we don't have any end-of-day closes back below the 50-day line, now at 12.75 pence. Katoro is next, and here the picture is we've hit an initial target, or the initial target that we had there, around 0.13, end-of-day close or a weekly close above that. We could be looking for a new leg higher to 0.22 as soon as the end of next month, and that is the upper parallel of the initial rising trend channel base that we've had there from back in April. Ideally, the shares stay on the right side of 0.11 pence, as that has been resistance over the recent past. MyHealthChecked is next. It was a requested stock, which I didn't really want to look at, but looks as though the requestee has got it right so far. Here we've had a break above the 50-day line around 10.5 pence above that. We're looking for 16 pence, and that July resistance line projection by the end of next month. That would also fill the gap down that we had back in August. Going on to a stock which I don't look at very much. Here it is, Petra Diamonds, and here we had a sort of inverted head and shoulders type pattern, neckline there around 53 pence. We're looking for a break of 53 pence to give us a potential target up to as high as 81 pence. At that time it seemed like pie in the sky, but at least while we're above the top of the old gap there from October and the 200-day moving average at 65 pence, we are looking for 81 pence as soon as the end of next month. Obviously, we've come up a long way, so that it wouldn't be totally out of the ordinary that this was, or we've just seen the peak today. On to Predator, which has had an interesting development in the last week or so. We've had a bounce off that uptrend line there from January. That was around 7.75 pence, and above that we're looking for the shares to have another go at breaking the rather sticky 12 pence area, which has been in force rather surprisingly since August. I suppose it's not that surprising given how many fundraisers the company's had over that period. Moving on to Pantheon, and here nice noises as well on a technical basis. We've seen the shares consolidate at and above the 50-day moving average now at 23 pence above that. Looking for a push to the top of the recent range at 28, and then best case scenario would be up to 33 pence. And that October resistance line by the end of next month. Moving on to the last two, and given that the gold price is looking rather chirpy these days, not surprising that Serabi has delivered the goods. We had a double unfilled gaps to the upside in October, in fact triple gaps to the upside in October, and this month we seem to be repeating the pattern with the unfilled gap to the upside at the start of the week. We've also hit our best case scenario target at 43 pence, and probably done that ahead of schedule. The view now is that above 43 pence on an end of day close basis, looking for 55 pence as soon as the end of the next month, which is the top of that, which is that resistance line projection from back in March last year. Ideally, whatever happens, we stay on the right side of 40 pence, as that has been the recent resistance for the shares. Finishing off, as usual, with Wildcat, which after a little bit of delay managed to almost exactly hit that target line there, September resistance line projection. That was at 40.43 pence, and an end of day close above 0.43. We're looking for a fresh target here. That would be along the lines of the line I'm about to draw, an upper parallel of the September resistance line target that we've had already, so 0.6 pence by the end of next month if we can get a decent end of day close above the current intraday high at 0.43. Upside valid while we hold above the old September resistance at 0.39 on an end of day close basis. That's it for me today. More updates over the weekend.